This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Prashant Nair. With me, my colleagues Nigel and Ekta is with us here for the next 2.5 hours, guys. Hi, good morning, Ekta. Morning.
Hi, Prashant. Hi,
Morning.
Nigel. Well, yes, definitely a surprise edition, I would say, for this Monday, considering all the colleagues have gone on leave. But nonetheless, it is holiday weekend, and we're getting into holiday mode, and that's pretty much evident in terms of the markets as well.
Well, it's the most wonderful time of the year, right? You know, so...
especially when you have leave coming up next week.
Yes. I mean, I wish it was somewhere this week, but you're getting the Christmassy feeling, but only the weather is not really changing. I thought it'll get a lot cooler till now.
Yeah.
But anyway, let's hope that happens. But Christmas is almost here, so...
But I agree, the anticipation of it is probably sometimes better than actually doing it.
just 300 hours left in this calendar year, and it's done and dusted.
We'll have a clock running, the hourly clock running, and counting us down to that 300th mark in a bit.
And when you come back, remember, it's earnings season.
Yeah, so let's keep that out of it. But let's get straight to the market action.
Oh, absolutely. What fortnight we've had, right? You just sort of... So, what I want to do is start by not telling you what happened on Friday, but actually just kind of rework our memories and kind of talk about what happened over the last 2 weeks, because it's been absolutely astounding, absolutely bullish kind of up move over the last fortnight, the last 2 weeks. So two things happened, right? The first week, the first of the 2 weeks I'm talking about, we of course had the state election results. Market saw a big move, and then the market went into a consolidation kind of a phase, and boom, you had on Wednesday the Fed, in a way, kind of talking about a pivot. They said that rate cuts are coming into view. So one was local, it was followed up with global, and the end of it, over the last 2 weeks, the Nifty has added 6%. The Bank Nifty has added 7.5%, and you've got the mid-cap index, which has added 5%. So this is, as strong a gain as they sort of come. Now, just to add to the flow picture, right? FIIs, I just looked at since that state election result, since that Monday. By the way, flow started coming in the Friday before, Thursday, etc. But forget all of that. From that Monday, over the last 2 weeks, FIIs have bought 28,000 crores worth of stock. That's almost about $3.5 billion. This includes, of course, blocks and, passive flows, the FTSE change, all of that. But foreigners have net bought 28,000 crores. That is a very large number to come into the market, any market, in the last, in just 2 weeks. Now, with the sector, I mean, we've been talking about PSUs, and we sort of put out the PSU as the leader once again on that Monday after the state election results. But this latest sector to join this rally, this party, has been the IT services sector. Last week, it added 7%. Over the last 2 weeks, it's up 11%, right? The bulk of the gains came in the last 1 week. US stocks, by the way, have also seen a completely 180-degree turn in sentiment. Remember, India has been doing well, even without any help from the global market, etc. Dollar rising, yields at 4%, 5%. The market here did not look very vulnerable. So we've been doing well, but the US market had not been. But there's been a big turn in sentiment. The S&P last week hit a new year-to-date high, and it's just about 2% off fresh all-time highs. I'm talking about the benchmark S&P 500. Yields are down about, 110 basis points, more than that, from 5% to 3.9% wherever we are in the last 8 weeks. So, these are very large moves once again. Now to come to, this is the backdrop that we're coming into this new week and the end of the year, etc., right? And markets are laser focused on the fact that the Fed Chair Powell has said rate cuts are coming into view. The first full 25 basis point cut is going to happen in May, etc. But on Friday, a historically dovish Fed member, Williams, he pushed back on this rate cut thesis. In a sit-down interview, he basically said that we're not really discussing rate cuts right now. He maybe wanted to push back on financial markets rallying and getting too hot and excited, right? But that's something we need to take note of. Data kind of supported his view because you had industrial production numbers and you had services PMI, both of which came in strong, much stronger than expected. But markets have not really paid attention to this yet. I'm just saying that it's so bullish out there, you got to start to watch out for risks. I mean, it seems like nothing can go wrong, and that's when things actually start to falter a little bit. On Friday, the dollar index, for example, went up about 0.6%. We're at about 102.59. And I would say, not just here in India, in global markets, a lot of positivity is baked into stocks at current levels, right? So you have to be mindful of the fact that, this is the case. Markets are forward pricing mechanisms, and a lot of that positivity is being priced in very, very fast. Just an example, to take the case, the All India Institutional Survey, which is widely regarded as a pretty good indicator of tops and bottoms, that spread, bull-bear spread, is at plus 32. It's the highest reading since April 2021. Guess what happened in April 2021? The first Fed hike, right? The cycle began, the hike began. Now, this is telling you that you got to be mindful that markets have done well, and it's not as if you're starting at the base or at a very low base. Now, Nifty on Friday, just to circle back to levels, continued its upward momentum, and it's looked very good. Channel resistance for the Nifty, just to look at levels very near term, it stands at about 21,750. I thought there was a great gap when I mentioned that 21,750 level on Monday, but in 1 week, we are about 250, 300 points away from that level, but that's the first resistance. And the big gap area between 20,950 to 21,074 should provide support on the downside. On the Nifty Bank, you basically at new highs, so you just have to project higher. But I just like to put a support. The 40-hour exponential average is 47,379. It's looking good out there. It's looking just too good out there. And there's no reason to be skeptical for the heck of it. But just, don't go wild. Don't go chasing things without, which makes no sense. And there is that kind of stuff showing up in the market in various pockets, etc. as well. The GIFT Nifty is indicating about a 70-odd point lower start. So a little moderation, at least at the word go. Ekta.
Well, Prashant, I'm just going to build on those statistics that you brought out, because month to date, it's been an absolute rally for our markets. Nifty up 6.5%, sensex up around 6.7%, mid caps up around 6.24%, small caps have rallied around 4% the least, but they've outperformed on a year-to-date basis. Nifty Bank is up around 8.2%. We don't have the numbers up, but I just want to point out that, in terms of the PSU banking index, that has rallied 14% this month itself. The PSC index has rallied 12.5%. And like you mentioned, the IT index is up close to 10%. So these are the indices which we need to watch out for in terms of incremental buying. For today, yes, Asia is a bit lower. It could be consolidation. We have Brent crude, which is inched up a little bit, and the GIFT Nifty indicating that maybe there could be some amount of profits taken off the table, which wouldn't be too much of a bad thing. The other thing, Nigel, is that FIIs, they've pumped in money in the month of December.
Yes.
And this is a time when most of them are on holiday.
True.
But nonetheless, over 25,000 crores in terms of a net buy figure, which is coming from the FIIs. And we have the DIIs, which have supported as well.
Well, I'll tell you what, on the FI number, why it's even better is because in November, in November, we had a buy flow, but it wasn't as good as what Taiwan or even the South Korean market saw. In December, in fact, we are getting a larger chunk. Yeah. So it's making you feel even better. So the FI flows are very, very good. And if you just take a look at the texture of the markets, the Nifty is moving up. Both the pillars of the markets are firing. So the IT index as well as the Nifty Bank, both of them are doing well. And when the double engine fires, well, it's always very, very good news for the Nifty itself. So the uptrend on the Nifty is well and truly on. The bulls, well, they'll be looking to trail their stop losses since now the Nifty, we're talking about around 21,000 odd. We're almost at 21,500 approximately. But what stood out last week was that the large caps, well, they are coming to the party now. And it appears they're in for some kind of outperformance, at least in the near term. They outperform both the mid-cap as well as the small cap on Friday, as well as for the past week itself. What did the FIs do? Well, they covered some mild shots, and they added long positions as well. So that's why it takes long positions to around 60%. And in absolute terms, the long positions are at around 50,000 contracts. That's the highest we've seen in the last 3 months or so. So that's, a rather important sign as well. You don't want the net long position, though, go to that 90,000 or the 1 lakh mark. From there, we've normally seen that the markets cool off a little bit. So we're a distance away from there. The last time we saw more than 50,000 contracts out was a few days ago, but it's the highest since September 18th, 2023. On the options data, the put writing has really come to the fore. And that's why you're seeing, even in Friday's trading session, an uptrending market, 21,300, 21,400 put. Between them, they added close to around 1 crore shares odd. The premiums as well did see a sharp decline. And the 22,000 call, well, the start of the week, it was just ₹1 or so. It ended the week at around ₹8. So that seems that some kind of, out of the money put call buying is what we're seeing. And a punt is taken there. If we see another 500 points, we'll make money. Otherwise, that contract will expire as well. Just 1 point. The PCR is gradually moving to around 1.5 odd. And that's when we see some kind of cooling off. So on the upside, well, sky's the limit. Now, the Nifty is in an uptrend. But on the downside, looking at the options data, the Friday's low is 21,235. That's a crucial mark on the downside. And since the 21,400 put did see a fair bit of addition, the 21,320 is the level that I'm looking at. So that's a crucial support zone. The GIFT Nifty suggesting a pullback. I think you need to participate on the upside, trail your stop losses. And if it gets stopped out, so be it. But, you need to play this market on the upside. The crucial factor is, does the Nifty Bank want to go ahead and test the 50,000 mark before the end of this fiscal? If that's the case, 22,000 is well and truly on the Nifty. So the Nifty Bank is the crucial one in here. 50,000, if it gets there, that's the number you need to watch. Should pull up the Nifty Bank at some point of time.
All right, Nigel. So that's basically the setup, as you know, from a rounded 360-degree perspective on what you need to know as we start another session. So 70 points lower on the GIFT Nifty is what we have as we start this fresh week. Let's get you some money market views in terms of how things are looking. Some views across the asset classes. B% of ICICI Bank says dollar index moved lower, pricing an incremental a dovish Fed outcome. The rupee, he adds, supported by the dollar inflows and a weaker USD, appreciated marginally last week. He says with improved trade deficit and positive outflows for FPIs, he expects the rupee to face appreciation pressures but may be restricted by RBI's efforts to recoup forex reserves. In the coming week, he sees the currency between 82.75 to 83.25 to the dollar.
On the bonds, B. Prasanna says global yields registered new lows as the Fed pivot arrived much earlier than expected. He says back home, the RBI also relented, infusing much required liquidity in the form of the 7-day VRR operation in the wake of scheduled outflows. He adds local yields rallied with steepening bias on expectations of earlier than expected change in liquidity stance and positive inflation surprise. He expects the 10-year benchmark bond yield to trade with a positive bias between 7.10 to 7.25 for the week.
Well, we've got plenty of stocks to track for you. For the time being, though, we run you through the list. Let's run you through what all we're looking at in our top 10 segment. Infosys, Startup Power, Zydus Life, Mascon Dock, sugar stocks, all of them will be reacting to positive news flow. So 5 in the green, while 5 stocks will be reacting to negative news flow. They include Z, United Spirits, Granules India, Solar Industries, and PB Fintech.